Well, welcome, folks. How lovely to have you with me today for this first Danielcode webinar of 2026, and it's simply titled Welcome to 2026. So I do wish all of you a prosperous new year, a happy New Year celebration, which is passed by a few days now, and we have a wonderful, exciting trading year to look forward to. Christmas has come and gone. The markets managed to put together a pretty strong semblance of a Christmas rally, and it's continuing on equity markets to be very, very bullish indeed with the outlook from what I can observe from the trading figures I see. A whole lot to talk about. I think it's going to be a pivotal year. I think there's some seriously exciting things going to be happening in markets, and no doubt a lot of off-market activity, which the market in due course will form an opinion about. Some of that we can see warming up already. The Department of Justice in the United States instituting a criminal investigation of the governor of the US Federal Reserve, Mr. Powell. That is going to have serious consequences when the bond market gets around to thinking about it further. It's going to be potentially disruptive. The bond market, always remember, is the absolute authority on markets. It can make or break markets. The last thing that anyone in this administration wants to do is upset the bond market. So that's coming down the track pretty quickly. Later on this year, we've got the midterm elections, which are going to have enormous consequences. And in the meantime, we've got these incredible situations with gold and silver at absolutely parabolic highs. Quite amazing to see that. Undoubtedly, at some stage, there'll be a reaction. And at the same time, we've got equities powering on, still very bullish. Seems to me a whole lot of the gloss about the AI marvel has come out of the NASDAQ with more sober thoughts about what the cost of all of these massive databases is really going to be. Still, the unanswered question about AI is its commercial applicability, by which I don't mean school kids paying a small monthly fee to have their essays written or improved. I mean real world commercial benefits. And they would need to be massive to justify the cost that is being spoken about to build out the whole of the AI apparatus. So let's move on and see what we can see, because there's a great deal to think about. Here we are. I show you this slide every session we have a meeting, folks, to tell you that markets are rational, orderly, and sometimes predictable. And I also show you this slide. Recently, I've been showing you this to say there is no such thing as artificial intelligence. It is just Google on steroids now. That's my view. It may be wrong, but what we do know is that the prices that are being talked about to build out the various databases that are going to be needed to support AI are referred to as astonishingly large numbers. It will take 5 trillion to fund the AI cycle, and the US government is on the hook for over 1 trillion. I thought that was pretty scary stuff myself, but we'll see. We've had plenty of boom and bust over the years, and it'll be really interesting to see what the commercial applications are going to be of AI beyond those matters of huge convenience, which it undoubtedly does, and its ability to process large amounts of data very efficiently. Anyway, let's start by looking at what we had in 2000. This is a 24-day chart. This is, if you like, the Danielcode equivalent of a monthly chart, as there are 22 trading days in most months. And this is a 24-day chart where every bar is 24 days. And that allows us to look over a much longer period to see some of these established trends. And you can see quite simply oil's been in a downtrend since October 2022. And quite recently, it's just sharpened up a little bit as it dived into the lows. But I can show you that with the next chart. And this is our 6-day chart of crude oil. We create 6-day charts for crude oil, S&P, gold, and UST bonds. And they give you yet another view of markets and what the probabilities are. You can see with this particular chart in crude oil that back in October 25, we had the black line, the famous Danielcode black line, which I've left on this chart, and I put a blue oval around the number 5769, and that was the famous black line, which has two predominant applications. Firstly, it acts as support and resistance, as do all of the other Danielcode price ratios. But the black line has the special property that being the last level of support and resistance for any chart, a close below the black line in any time frame moves the probabilities massively in favor of taking out the swing that created that black line. In this case, that's the low back in April 2025. And the market closed below that black line all the way back in October last year. And as soon as that happened, I put that blue oval around the number to alert you how important it was. So we then had a rally up, and since then, of course, you had a perfectly wonderful short position coming down, 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 with a couple of little interruptions, and eventually it broke through the black line again, and this time it went down low enough to take out the swing low all the way back in April 25. Since then, of course, it's having a little reaction, nothing too exciting, but gold has got an oversupply situation. And it's interesting that this was something that back in October last year, you were on alert that that black line, that indeed the low, the swing low from April 25 was going to be taken out, as it was, pretty definitively. So, you know, there's one of the really sensible ways that you can see benefit to your trading by being aware of some of these statistically important moves in markets. So that was one of them for you. Here's another beauty, and this is the S&P. And you can see it's just on a one-way track, and it's been on that one-way track all the way since November 2022. More importantly, you can see the angular blue lines, which is a Danielcode trading channel. That's different to most normal ideas of support and resistance. That's the market itself creating those lines and then creating the extensions of those lines, which are the dotted red lines you can see continuing up at the angle. And I actually stopped moving that blue line in April last year. Since then, probably earlier, just looking at this chart, it may have been February last year, but some time ago, and then it had a little correction for a few periods, and then straight back into that same channel. And it's been hanging on that channel like home sweet home. You can see, look at the number of times that either the high or the close has actually landed pretty much on that median line. If you look at the blue lines for a moment, there's three of them. The center one is the median or the mean. And you can see that since the correction back in January to April last year, the market has just been hitting that extension of the median line, either at the high or the close, with quite extraordinary accuracy. And it's a beautiful thing for bulls, and it's still going. And there's no noticeable diminution in the enthusiasm for equities. What we have seen, though, is that the Nasdaq is now relinquishing its leading move, and of course, the Nasdaq has been the driving force in the S&P and all markets. Remember that of the so-called Magnificent Seven, the super expensive, super valuable tech stocks, they comprise over 40% of the S&P. 7 individual stocks comprise over 40% of the value of the S&P. So they've been a driving force, and they're still there. They're a little bit muted, but they're still there. And a very interesting comment from Greg Palladini, one of the great Danielcode stalwarts, who's been with us for many, many years. His question is, can equities, the broader equities, he's talking about the S&P primarily, can they continue this aggressive push without the input from a market-leading Nasdaq? And that's a very salient question. My view personally is they can't. I know there's a bit of a push to talk up the Russell, making a big rally up, exciting rally for the Russell. Can it be the new market leader? It may be on an occasional day-to-day, but I can't see it exercising that sort of influence. Albeit, you have to be said that market conditions in the States for business are better than ever. You've got a administration that's totally tuned into free enterprise, that's totally tuned into innovation, to market freedom of opportunities for all businesses, and really the atmosphere, the environment, if you like, for business in the States has never been better, not in recent times anyway. And that extends, of course, past traditional storefront businesses. You could add that to crypto, which is having an enormous joy with the friendly approach taken to crypto regulation by the Trump administration, and the placing of appropriate people in the position of influence. That market, very welcoming, very business friendly, and that's all to the good. So here's a 6-day chart of equities, and you can see it found one of the blue lines and put it in a key reversal bar. That's not definitive. It can continue to rally a bit more here. As I say, there's still that massive enthusiasm for equities bubbling up all the time. This is your 24-day chart, folks, for gold. And have a look at this extraordinary run up it's having. I've just put these red lines on to show you that every move has just been sequentially stronger than the previous move. Now you're in, ballistic territory. It's going straight up, as is silver. When you see the silver chart, it's even more imaginative than gold. And you have to be imaginative at these heights. But very strong support. Lots of buying, lots of last minute, oh, whoops, I left it too late buying, which of course is going to be undone at some future stage. But at the moment, we're in the middle of an absolute bull mania. It's wonderful, and I'm excited not only about the upside, but what inevitably will happen and likely happen this year. And a normal correction, which the probabilities always are 50% of the last leg up. That's an awful lot of money. That's a very, very long way from where markets are now. So, as I say, this is going to be a year of massive opportunities. Here's a 6-day chart of gold. As you can see, it found resistance at the Danielcode blue line, have a look how perfectly these markets track these blue lines and these red lines, which are all Danielcode ratios. They have nothing to do with Fibonacci. They don't have anything to do with old highs or old lows. They're completely endemic to the markets. They're actually, these numbers are created by the markets. Some of these lines have been on these charts for weeks, maybe months ago, just see how purposely and specifically these markets keep finding these Danielcode ratios across the range of all the markets we cover. This happens in Forex, this happens in all the futures markets, it happens in precious metals, it happens in the grains, it happens in the equities, it happens in the bond and the securities markets. And if you're not seeing that specificity, if you're not seeing how careful markets are to find those numbers, then you're really missing something. And if you simply take these existing numbers you're seeing now, put them on your chart and watch going forward, truly you will be amazed. We're shifting now to look at UST bonds, which, as I say, this is the daddy of all markets. This is the one that can make or break anything. And what we saw here, if you look at this chart, it's a very old chart. I've been showing you this chart for years and years and years periodically, and we tracked with great interest as it went up into its all-time high back in, looks to be, here we are, there's the higher bar. The closing high was around May 2020, and we charted this fall down from that. And at every stage, you can see how the market has stopped at one of these dotted red lines, which again are extensions of the Danielcode trading channel. And with that trading channel, you have the opportunity to increase the number of channels. Once you've placed it correctly on the chart, you'll have one level at the highs, one at the lows, and the median or mean in the center. But once you've created that channel, you can create more channels below or more channels above. From memory, the high came in at 5 Danielcode deviations from the mean. So normally with this sort of a chart, we talk about standard deviations is the mathematical talk. And a standard deviation is 1. We're not talking about standard deviations. We're specifically talking about Danielcode deviations, which are 1.593 of the market range. And you can see how accurately every one of these dotted lines, the market has stopped. It's recognized these price levels, which are largely secret. Very few people know these Danielcode numbers and the Danielcode ratios, yet markets know them, markets recognize them, and markets react to them all the time. And we charted all of that, and we talked about it on its way down, and a lot of our clients had some very big holdings in bonds, and the Fed, of course, has done everything it can to soften the blow by changing the rules to allow more bonds to be technically held to maturity, so they didn't have to face the write-off, the massive write-off in bonds that this fall in price has created. And where it is now, with 6 Danielcode deviations from the mean, and you can see from the little arrow near the low, that's where this market's tracking. And it's been tracking around that level for 1, 2, 3, 4, 5, about 8 or 9 months. And that's not the low. There was a lower bar before that on the linear approach, which is just how you would normally look at a chart on a page. But once you get to understand these Danielcode angles, which of course are charting time and price, you can see that the existing lows are just running right along that dotted red line and building, I guess they're building a level of support. And that will be exciting. It certainly will. So this is the 6-day chart for bonds. This doesn't tell you very much, except it's just sitting in the middle of a range, and it's been hanging around there for the last 4 bars, which is about 4 months. So it's all pretty calm and quiet before the storm. And whilst I talk about storms, let me just mention that I was talking to Frank de Beer recently, Frank DB, who's the gentleman who runs the 4th seal for us. and Frank is a former student of mine when I taught him about price and time cycles, long-term time cycles. And that was way back in 2011. And he went away and back to Belgium where he lives. He has a farm there, with family farm, which he runs. And he came back about 3 years later and said, I've been doing nothing but studying your time cycles, and I've done so much work. I'd like to run the commentary on it for you, which he does. So every week, Frank gives you the charts and the commentary, and he's been doing crude oil, S&P, and also gold. What he's asked is he'd like to get rid of the crude oil coverage and replace it with US T-bonds, because he thinks there's a very big move in T-bonds lining up to happen as we go through this year of 2026. So I'm more than happy with that. I said, go ahead with that. So those of you who want to know about these major time cycles, you should get subscribed to the Fourth Seal, and you'll see Frank's charts and commentaries every Monday. And it's pretty amazing stuff, I can tell you. I invented all of this stuff, of course, so for me to be amazed is quite strange, but it is incredible how accurate and how logical markets actually are when you understand the detail of them. Okay, so there's T-bonds having a bit of a rest at the moment. This is the NASDAQ, which of course was the dominant player of 2025, wasn't it? And it's here. It's a pretty perfect up and away with just one single correction and a minor flip a bit later on in April last year. And this actually doesn't have the Danielcode trading channels on it, but I can assure you that this market has just been moving, as has the S&P, exactly in line with those Danielcode trading channels. And of course, if there's going to be any alteration of the trend, the first thing we're going to see is a break below the Danielcode trading channel, which is very, very accurate and highly specific. Here's the Russell, which, as you can see, has had a nice boost for the last leg up, which is great. And it's run straight into a 62 cycle on the 24-day chart. Now, the 62 cycle is an analogy to the 59 cycle. We expect starting and ending moves to coincide with important 59 cycles. And the 62 is an alternate to the 59. Occasionally, not very often, you can see the market skip through the 59 and reach the 62, and that's where we are now. And I'm not going to say that's a perilous position, but it's a position that does have some capacity for an important correction. And this market, of course, has been correcting a long time. It basically spent the whole time from April 21 through to November, December 24, running through a fairly prominent correction. But can this be the leader of the free world of markets? I don't think so. It may be, I say, on various days, but I don't see this as having the driving power of the NASDAQ and those big tech companies, which have revolutionized many parts of our world, haven't they? They're so important. It's extraordinary stuff. Okay, here we have a look at soybeans, and you can see it's just basically bounced off one red line, gone up to another and turned its toes up and run away from that. Those red lines are just part of the Danielcode retracement tool, which most of you have. If not, if you're subscribed to our TO3 service, you can ask Terry, and he will, at support, he will give you the tool that will enable you to create all of these high probability retracement levels for yourself. So silver, look at this. This is just takes your breath away, doesn't it? I mean, this is just amazing stuff. So it's a delayed catch-up move that's gone parabolic plus some, parabolic on 4 bars virtually. Quite extraordinary. And wonderful, wonderful for producers of these precious metals, wonderful for investors in these precious metals, and we'll see what the future holds. Wheat, here's wheat. Well, you probably know that China used to be the biggest buyer of wheat and soybean from US farmers. And in 2024, they stopped buying the bulk of their requirements from the US, and they switched massive parts of their purchases to Brazil. And there's been no really serious support for the wheat price, as you can see, since 2000, late 22, 23. It's just been down, down, down. And it too is just running down this Danielcode trading channel again with a high level of precision. Admittedly, it's in the upper half of that channel, so there's potential for some small rallies, but underlying it is the buying, the demand from China, which is not there. And it wasn't there last year, which means storage facilities in the country are full. And what are they going to do with this next crop, which is on its way? Storage facilities, like everything else in life, are limited. And we really, really needed China as a buyer to support this mid-America grain farmers. And Trump, in his recent meeting with Xi, the president of China, went to some lengths and stated that he'd received all sorts of assurances that China would return to buying US wheat and more notably soybeans. And soybean is a market that's in critical condition because of the price. It's below production cost, and that's a big, big problem. This is a very interesting article, and it's about a grower in Georgia, a grain grower, but predominantly soybean. I put the link to this article there, and I do suggest you take time to read it in full. And it's a story about a gentleman called Alex Harrell, who's no ordinary farmer. He's the top of the tree. And this article starts off in August 2024. Alex Harrell fired the soybean shot heard around the farm world with a bin-busting 218.28 bushel per acre crop, shattering his own world record. And back to back, he's grown the highest yielding soybeans in history. So this guy's the top of the tree. He's a brilliant farmer. He has enormous skills, obviously, to stand out in such a competitive area. The story is about the fact that he has been farming 13,000 acres. It says in this particular selection that I've given you is a 6,000 acre operation, but he actually has been farming 13,000 acres, and a lot of that is leased land. And it's absolutely prime Georgia real estate, all irrigated, all grown with the very latest of technique and chemicals, machinery, everything else you can speak of. And what he says here is that he's cut back at least half of his production. He's got half of his ground. It just hasn't been planted. And he says, I can't speak to the rest of the country, but around here, that's Georgia, generational growers are either cutting back, quitting, falling into Chapter 12, or grasping at straws. Now, this guy's the best there is. He's the best grower in America. And he's got the track record to prove it. And he goes on to say, something has to give when you go 3 years and more just spinning your wheels on net profit. The numbers aren't complicated. When fertilizer, chemical, and machinery costs go up 300% over a short span of time, everything is upside down. especially when commodities go in the tank. So here's one of the very best growers of beans in the world, in America, and he's saying that he can't. It's not commercial to grow it. He's cut back 50% of his acreage. He might have to cut back more, and it's damning, isn't it? I mean, it's tragic, and the overflow cost of problems in the farming industry are huge. Farmers support massive numbers in employment. They have the people who work on the farm, the people who run the machinery, the people who repair and keep the machinery running, the people who market and distribute seed and fertilizer and chemicals. It's a huge multi-level business, and I know a little bit about it because I was on the land. I was more interested in cattle and sheep than actually farming. But I know all about it. I have a lot of friends in that business, and it's dreadful. It really is dreadful, and that's got to have some flow-on effects. Now, I know Trump's come out with a massive aid package, which will be some little help to farmers, but boy, the withdrawing of China's buying power is hitting home in a big way, and it's serious stuff. So I do suggest to you that you take time to read that whole article. I found it fascinating and frightening at the same time. Okay, let's move on to our next chart. This is really interesting. This is about equities, folks. And you can see here, it's talking about the long-term net margin in equities. And it's got a number of levels. It's got the pre-1992 median, which was 5.1, and it's got the post-2002 median, which was 9.2. And as you can see now, it's up at 12.5, and it's been a bit higher than that. It's had a pullback. It's rallying back up now. And historically, this current level of long-term net margin is going to be very, very hard to sustain. Very hard indeed. And it's a long way down from where we are now to the historical post-2002 level at 9.2 and 9.5 or thereabouts. Bear that in mind as you think about your investment strategy going through the current year. And of course, you shouldn't be worrying too much about your investment strategy if you were a futures or forex trader, because you would know exactly what's going to happen and be able to trade it accordingly. Okay, this is a little promo for our Teach Yourself to Trade video series, which is comparatively new. With us, I guess we've been around so long, everything's comparatively new. But the Danielcode website went public back in 2007, and we've been hard at it ever since. But what we did last year, primarily early last year, is I developed these series of videos, short videos. They're less than 90 minutes, most of them are around 60, 70 minutes each. And we've broken up all of the teaching subjects into various syllabus levels. And you can take all of these at your own leisure, do it in the privacy of your own home. Don't need to talk to anyone if you don't want to. And these videos will give you all the information that you need to become a very safe and successful trader. And as an introduction to that, on our website, on the front page, we have these 4 videos, and they're very important. Video number 1 comes from a gentleman called Mark L, who's with us today. He's a retired engineer, and it talks about in detail his trading of the S&P and gold while he was doing his tutorial to learn Danielcode time trading, which is entirely different to any other sort of trading that you've ever seen. And he shows you the percentages, all of the percentages that he returned on his back testing over the whole of 2016 in natural gas and in gold, and I think he covered the S&P as well. It's quite extraordinary. I do recommend that you watch that, because he'll tell you about his journey as a student of Danielcode time trading, the highs and the lows, what he went through and where he got to, and it's amazing stuff. After that, you get video number 2, and this comes from a young gentleman. He's probably not that young. To me, everyone's young. I've got a bit older as the years go by. Called Justin. He lives in the beautiful Hunter Valley of New South Wales. And what he's done in video 2 is he's talked about what he found, what his discoveries were as he was learning how to create and trade Danielcode time signals. And they're quite extraordinary, folks. If you don't watch these videos, you won't believe what the probabilities are and the possibilities. And it's revolutionary and very, very exciting. Video 3 is from another couple, pleasant young couple. She's young, he's not. He live in Boulder, Colorado. Never seen, the young lady's name is Amy. She'd never seen a trading chart until she came to Danielcode, and as she says, seeing is believing, 500% in 10 months. But then go to video 4, and this is more from Justin, and this has been a major, major work of research and discovery. And what he's done is he's back-tested the Danielcode time trading strategy against over 100 years of data. Now, by that, I don't imply that he's Methuselah, who's lived for 100 years plus, but for a huge range of markets, all the markets we cover and a lot of others that we don't cover in futures and Forex, and all parts of futures, equities, bonds, precious metals, the lot, you name it. He's gone and back-tested the Danielcode time trading strategy against all of them. Some of them been for 5 and 6 years at a time. Some have been 1 or 2 years. But in total, he's taken well over 100 years of data, and he's applied the Danielcode time trading strategy to each of them. And he then gives you the detailed results, broken down by really some serious, thoughtful analysis of the most important percentages for you to see what the probabilities, or I should say the possibilities are in learning to create and trade Danielcode time signals. And folks, it's out of this world. I can't say any more about it than I can have my own students who very kindly talk to you about what they've done there. And to add to that, Greg Palladini, who's with us today, a wonderful supporter of Danielcode, he came back. He did a price trading Danielcode live tutorial with me in the States some years ago, and 3 or 4 years ago he came back to do his time trading tutorial. And what he said is, I'm going to share this with everyone, what I find, the good and the bad, and I'm going to post everything that I find on the forum, members forum, and you can go to that at the Danielcode website and find the heading that says something like learning the Danielcode time trading system, words to that effect. And you'll be able to read Greg Palladini's take on what he learned as he was undergoing his training to learn how to create and trade Danielcode time signals. Now, Greg's a well-known gentleman in California. He's a wealth manager. He's a super trader, and he's been kind enough to share his insights with all of you, which is so generous. And certainly, I thank all of these gentlemen and Amy, who've been prepared to share their hard work with the rest of you. Now, if you think you can go and do some back testing over 100 years of data, go ahead. But if you'd actually like to know what the results are, have a look. Justin's done it, and it's sitting there for you in video 4. Quite extraordinary stuff. Okay, so we call this Teach Yourself to Trade video series. You just have got, all of you have got a list of the syllabus with this invitation, this webinar. If you don't have that, just go to the Danielcode website. You can see the link at the bottom here. Will show you the syllabus for each of these video series, which this one here I've set out here, lessons 1 to 5, and I think we're up to about lesson 7 by now. Long-term trading, day trading, long pull creates, yep, short-term and long-term trading. So there's another lesson beyond that. You can just take the pieces you're interested in and build on your knowledge in your own time and at your own convenience. And it's been very, very effective. I'm happy to tell you we've produced some absolutely excellent traders from the Danielcode video series, not only in futures, but also in Forex. Thinking about Joris at the moment, one of our absolute star traders in Forex. Very, very doing extremely well. Wonderful young man. Okay, so turn now to the Forex and the US dollar index, and the US dollar index has been declared dead by many people over many, many years. As you can see, it's had a little consolidation. It did a TO3 buy signal on the 24-day chart. That's very, very strong. And that was way back in July, early August 2025. And it's been building quietly since then. Take a look at this next chart. This just gives you a bit more background data. And if you look at the high for the US dollar in 2001, and it's low in 2008, it's trading exactly at the 50% level between those two numbers. I've left that 50% tag in red sitting on there at 96,170. And it's been trading there and just above that level. So it hasn't died. It's weakened a bit, but it's no substantial issue. It's still trading well above the 50% level, whereas from 2000 and early 2002 all the way through perhaps to December 21, it's traded below the 50% level. So it's in an okay position. It's in a happy position. The Trump administration, of course, would prefer it to be weaker. That is always better for business because it makes your exports cheaper, so easy to sell, and your imports more expensive, which cuts down on the terms of trade considerably. Now, this is just what we've been doing for the last week, folks. And markets, as I say, have been compressed. There's no great big, well, very few great big movements. Of course, wonderful movements in gold and silver. But what I'm showing you here with our trading is that we're almost always on the right side of the move, whether they're big or small. Being on the right side of the move is lesson 1 for traders, and we are consistently on the right side of these moves. And you can see these signals. We create them every day in our TO3 and TO3 plus signals, and I don't talk about them enough because I guess I'm a lawyer, not really a promoter, but they are extraordinary, and I'm very, very proud of them. And as you can see, just in this sample of all of our futures and a few of our Forex markets that I'm going to show you, with the exception of natural gas that's got a data issue today, you can see that we're always on the right side of these trades, and some of them are very worthwhile. Here's gold. Look at the daily ranges here. 11,480 on our short, which only really lasted 2.5 days. 5,300 on the little rally, which again only lasted a day and a half, 2 days at most. And on our 6S charts, which are a little bit more recent than what I'm showing you now, our long trade in gold is sitting at $12,700 after just a few days. The daily ranges now are quite extraordinary. Here's copper. It sort of joined in the push on precious metals. Same sort of thing, 4,600 for a few days up, 3,500 for a day and a half down. Nice little bit of trading. Here's the NASDAQ, same thing. These ranges are compressed, but we're on the right time all the way. You can see our TO3 buy right at the low, our TO3 sell right at the recent high. Here's the Russell. Here's your TO3 buy, which I think was also a blue line buy signal, very important, our strongest signal. And it's run up $5,000 at 1, 2, 3, 4, 5 days, $5,000 in the Russell. Nice trading, isn't it? All of this, of course, is running and teaching you about Danielcode time signals. Very, very important. The new frontier, in fact. And here's beans. Had a little sell signal, around down $1,100. A couple of days up, $700. As I say, a very basic TO3 and blue line buy right at the blue line down there at 1.37. Correct to that little arrowhead you see in the grain number quote is actually called a correct. Okay, here's silver. Wow, same sort of thing, isn't it? TO3 buy 2 days up 11,500. TO3 sell, whatever it was, day and a half down. Amazing. And of course now, a few days later, it's right off this page, I can assure you. Here's wheat. Again, compressed. We were in a short trade for 1, 2, 3, 4, 5 days. A long trade, 1, 2, 3, 4 days up. Perfectly perfect. Sold the high, bought the low. Not much money. 400 one way, 400 the other. Now, of course, this is a much, much smaller contract. Don't be confused. Remember that the size of these contracts is very, very different. So smaller contracts, the numbers are smaller, but they're actually still doing very well on a percentage basis, which you don't see on the chart that I show you. Here's T-bonds. We've been long that for a day and a half, not much, and it hasn't gone far, $218. It's a drink, that's about all. But again, on the right side of the market, and that's the important part of it. We don't talk so much about Forex, and we should. The main reason, frankly, folks, is that we don't get intraday data on Forex from Trade Navigator, and the daily data, which we know we can rely on, is often late coming. And given the time that I have to prepare this webinar for you, which is sort of 4 o'clock in the morning, we often don't have that data available till a bit later in the day. But generally, it's been very muted as well, but there's a couple that have moved pretty nicely. This is the dollar CAD, the US dollar pair with the Canadian dollar. It's called the loonie. The Canadian national bird is the loonie, and the dollar Canadian, US Canadian dollar pair is referred by traders as the loonie. And the loonie here goes a very nice TO3 and time buy signal, straight up $1,200 into Thursday's close. And that's just one contract. I said it's a small contract. You can trade 10 of them. You can trade 100 of them if you want to. Here's the euro. Again, this is the euro against the US dollar, just referred to by traders as the euro. Had an almost perfect TO3 sell signal, TO3 plus sell signal, I should say. Gave a key reversal bar right at the Danielcode blue line of 18,055. Down, it's gone straight down $1,200 into Thursday's close. Pretty simple stuff, pretty nice stuff. Forex is a wonderful, wonderful trading market, and we don't talk enough about it. But I will make an effort to do more as this year goes on. This is the Kiwi. New Zealand dollar is referred to as the Kiwi. We're on a short trade there at the moment. The market's gone down a bit. It's got very strong support around about that 5,700 level, and it's been vacillating around that range now since December. We'll see if it has a breakout moment but unlikely at the moment. It's very much tied to the Aussie, which is also having a little think about things at the moment. So there we are. That's what we've been doing with ourselves and what we saw of last year. And what do we think is going to happen in 2026? Well, the markets, the equity markets are bullish. Precious metals are going parabolic. Lots and lots of enthusiasm for those markets. What's likely to change? Probably nothing. The Trump administration has gone out of its way to make sure that US businesses are working in a friendly environment. This is a business-friendly government. That's in its DNA, and it's unlikely to change. Some of the things that Trump has been doing are very, very good for the country. He's bringing in massive amounts of revenue with the tariffs. They may or may not be allowed to continue by the Supreme Court, but he's already said there are other methods that they have to impose what's essentially a tax to access this massive US market, the biggest single market in the world. As Trump says, you know, think of the America, excuse me, as a shop front, the most beautiful and the richest shop in the world. And if you'd like to play in it, you've got to pay. And that's basically been the approach to tariffs. And even countries like Australia that run a trade surplus with America have been hit with a 10% tariff. No one's escaped. So the Supreme Court has heard the case and will rule on it in the next few months. But if they oppose it as being unconstitutional, which I think personally as a lawyer it probably is, the administration seems confident they can replace a large amount of that income that's coming into America. Additionally, Trump is cutting down savagely on some of the stupid spending that's gone on, some of the institutionally stupid spending that's gone on under Biden, and really the whole thing with Biden has been a complete farce. You know, this whole story, you can't police anything at the border. We can't control illegal immigrants because we don't have the legislation. Now we'll roll up a new piece of legislation that will give us a bit more power at the border, which the Republicans said, phooey, don't want to do that. You've got all the power you need. No, they cried. Kamala campaigning on how we need new powers to police the border. Well, what this new Trump administration shown you is the regulators, the Border Patrol, Homeland Security, they've got all the power they needed. It just required the will to enforce the existing legislation. And under the Trump administration, illegal immigration has been cut down effectively to zero. And that is a massive achievement. And that is a wonderful achievement. You can't have a country without borders. And if you can't control your borders, you don't have a country. It's been so ridiculous to an outsider to see the protestations of Biden and Kamala Harris that, oh, we need more tools. Absolute rubbish. It was there. You turned a blind eye to it. They let in, I don't know what the figure is. It's quoted as somewhere between 6 and 10 million people, which sounds extraordinary. The rationale, of course, is that the vast majority of migrants into America, because it's a migrant nation, as is Australia, as is lots of other countries in the world. But the vast majority of those people who come to America finish up voting Democrat. And that's why Biden and the leaders of the Democrat Party were quite happy to have open borders. Let them in. They're all going to finish up being Democrat voters, aren't they? Absolutely disgraceful. Anyway, that's ended and ended suddenly. Folks, about your trading, think about this. If you have shares or you know people who have shares, if markets go up, shares do well. If markets go down, shares get wiped out. And markets vacillate. Markets never go in one direction forever, no matter how much it may seem that they do at times. If you learn to trade futures or Forex or both, you need never worry about markets going down, because they get paid exactly the same on markets going down as we get paid if markets are going up. Do you see that? If not, think about it. That's the whole basis of futures trading. And if you haven't already, folks, please help yourself to a free trial at the Danielcode website. There's much to learn. Just go to the website www.thedanielcode.com. Hit the free trial button, hit the register button. If you have any issues, contact Terry at support at the Danielcode, and he will be happy to assist you. Finally, and I know I've taken up much of your time today, this is our disclaimer statement. Very simply, it says that if you don't know how to trade, you will lose money trading futures and Forex, and you may lose a lot of money. So the message is, do not trade real money until you are sure that you are a safe and competent trader. One of the best ways of becoming a safe and competent trader is to do one of the Danielcode trading courses. They will take you on the right path and lead you to financial freedom. The good news about markets is that once you do know how to trade, it's very easy to make a lot of money in a great hurry. So I thank you, folks, for being with me today. I apologize for the delay in presenting this 2026 webinar for you. We've had some technical issues with the sound, which I trust are now fixed. In the meantime, if there are any topics you have particular interest in, drop me a line, jneedham@thedanielcode.com, jneedham@thedanielcode.com, and let me know what you're interested in, and I'll prepare some material for you at a future webinar. So I thank you for being with me today. I look forward to having your company at our next webinar in 2 weeks' time. Bye-bye for now.